Hello and welcome to this special interview that we have for you on Money Control on the occasion of 30 years of India's economic reforms. We are joined by Infosys founder Narayana Murthy. He will, of course, take us through what it was like running a company in the pre-liberalized era versus what it is today, and the next wave of reforms that will energize India towards its target of 5 trillion by 2025. Thank you very much, Mr. Murthy. It's been a while since we connected, so I hope you're staying well, keeping safe. But take us through what it was like to run Infosys during the pre-liberalized era. I think it was 10 years old in 1991 before the reforms kicked in.
First of all, Chandra, thank you very much. It has always been a pleasure to talk to you. And I'm very, very grateful to you for this opportunity. Now, you did ask about, what was it like running the company in the pre-globalization era?
Correct.
So let me talk about it. First of all, we were very small. Our aspirations, dreams, hopes, our horizon, and our possibilities were all small. They were completely circumscribed by our context. We were in a small office in Jayanagar, a southern suburb of Bangalore. Lots of our time was spent in traveling to Delhi to obtain import license for our computer accessories, and software. We spent much of our time at RBI offices in Mumbai for obtaining foreign exchange for my younger colleagues doing projects abroad, since we did not have the required hardware in India. Importing computers those days was both very tortuous and torturous. Banks did not understand software and wanted physical collaterals. We had none, as you know. So term loans and working capital loans from banks just did not exist for our industry. Let me tell you a story of how the context can limit your possibilities. One of our customers was ready to lend us an IBM 4341 plug compatible computer system called Magnusum, costing about $300,000 for us to develop a major package for the apparel industry. This would have enabled Infosys to create at least 50 jobs and train our youngsters on the most popular commercial computer architecture of the day, that is the IBM 4341 system. All that our customer wanted was a telephone connection in our office so that his officers could contact us daily and we could send them faxes every day on the progress of the project. But at that time, Chandra, the first priority for telephone connection after the official needs, of course, was for the homes of the government officers. Do you know what the second priority was? It was for the homes of the retired government officers. Let me now tell you how our context limits our aspirations. Even after 10 years of hard work and sacrifice, none of my younger co-founder colleagues had graduated to own any visible signs of economic progress like houses, cars, and phones at home. During 1990, Chandra, as you perhaps know, there was an offer to buy us out for a small sum of 2 crores. That is $1 million at that exchange rate. When this offer came, most of my colleagues were quite enthusiastic about selling the company. Today, Chandra, Infosys has a market capitalization of over 650,000 crores. That is why I said our context limits our aspirations.
Can you share some anecdotes rather on the pain points that existed pre-reforms that went away post-reforms? For example, you had to apply to RBI if you had to travel abroad even for a day, you had to take forex from them, and you also would have to have made multiple trips, and it took you various months and years to even secure a computer.
Well, let me tell you an unbelievably bureaucratic story about my friend K.V. Ramani. Now, Ramani applied to the RBI office in Chennai in 1986 for foreign exchange to visit Frankfurt for 2 days and Paris for a day to meet his prospects for his software export business. He obtained permission from the RBI after 15 days. When Ramani went to Frankfurt, the prospect he was to meet in Paris on the third day changed the time of the meeting from 4 p.m. to 9 a.m. Ramani went to Paris the second night itself to attend the third day meeting in Paris at 9 a.m. Ramani ended up spending one night in Frankfurt and 2 nights in Paris. Those days, Chandra, we had to submit a tour report to RBI after every trip abroad about our utilization of the hard currency released by the RBI. When Ramani returned to Chennai, he submitted the tour report. He promptly got a show cause notice from the RBI Chennai. Why Ramani had spent 2 nights in Paris and one night in Frankfurt, as against the RBI approval of 1 night in Paris and 2 nights in Frankfurt. Chandra, probably I served on the RBI board 15 or 20 years ago. When I recounted this to my friend Dr. Bimal Jalan, the then RBI governor, he just could not stop laughing at this ludicrous behavior of his officers. Let me give you another example. When we applied for license to import a computer, the process took 2 to 3 years and anywhere between 30 and 50 visits to Delhi. However, during this period, technology in the US advanced every 6 months. By the time we got our approval to import a DT MV8000 computer in December 1982, after nearly a 2-year wait, the disk drive manufacturers in the US had released a new version of disk drives with 50% more capacity at 30% lower price. When I went to DOE to update the model numbers in the license, I was advised by the officers against it due to the possible inordinate delay in obtaining the approval. I was adamant, and of course I applied. It took us, Chandra, another 12 months to get the model numbers revised in the license. Those days, technology progressed every 6 to 9 months in the US. Thanks to the Indian bureaucracy, India remained at least 2 generations behind and paid 30 to 40% more for an inferior product. Chandra, this is
Right.
the story. Yeah.
We're also in the middle of very interesting times today. If you look at the bull market, a lot of internet companies are raising money at huge valuations. But what was it like to run a public company then and raise money?
Chandra, first of all, my congratulations to these wonderful entrepreneurs. I salute them. I wish them even greater success. Now, let me talk about our days. We were the second software company to go public. My friend Ashank Desai's Mastech was the first one to go public in December 1992. We originally wanted to go public in 1991, 10 years after we founded the company. But we faced delays, Chandra, due to the assassination of Sri Rajiv Gandhi, the Babri Masjid fiasco, and the Harshad Mehta scam. The stock market did not know those days anything about the prospects for Indian software services companies in the export market, particularly in the US. However, we were prepared very well. Thanks to Nanda Nilekani, V. Balakrishnan, and G.R. Naik, we had firm projections for the first 3 years after the IPO for both the top line and the bottom line. However, the quality of the red herring in India those days was very, very low. Most information in the red herring document was junk. There was not much information about future prospects of the company and the risks that the company faced. There was no mechanism like the US style roadshow. There were very few institutional investors in India. We did not have one-on-one meetings with knowledgeable institutional investors. We could not collect data for demand from investors, and we could not decide on the price at which we would go public on the last day of a 15-day period roadshow like it happens in the US. I must record here that but for the kindness, commitment, and support Infosys received from ENAM founders, Sri Vallabh Bansali and Sri Nimisha, Infosys would not have reached where it has today. I remain ever grateful to these two kind people. I am also glad that SEBI came into existence in 1992 and lots of good global practices have been adopted from the developed world and several new or several next practices have been created by the extraordinary officers of SEBI in cooperation with corporate India.
What fundamentally changed for you as an entrepreneur in terms of the reforms of 1991? What do you believe is the most visible way or the visible change in the way Infosys could function?
It's an excellent question. Entrepreneurship is about converting an idea into value for customers, jobs for employees, wealth for investors, and of course, entrepreneurs, and finally, taxes for the government. Entrepreneurship flourishes in an environment of catalytic encouragement and support from the government. Till Sri Narasimha Rao, Dr. Manmohan Singh, Sri P. Chidambaram, and Sri Montek Singh Ahluwalia waved the magic wand of reforms in July 1991, Infosys was constrained from using imagination to succeed in the marketplace. For this imagination to translate into action, we needed permission from the government for every little thing we wanted to do. After the liberalization, most of these hurdles were removed. Infosys was liberated to find its rightful place in the market. Decisions on opening sales and delivery offices, hiring talent from abroad, hiring quality legal and brand consultants, and of course, investment bankers from abroad, going public in India and creating ESOPs in India, listing abroad to gain visibility of CFOs there, creating ESOPs in hard currency using ADRs, and raising funds for quality, productivity, technology systems, and to build world-class campuses were taken, Chandra, in the boardroom without having to waste time in the corridors of North Block in New Delhi. There was a new level of aspiration, confidence, determination, proaction, hope, enthusiasm, and can do spirit that simply had not existed in the company till then. Using these attributes, Chandra, Infosys has become the leader in customer focus, employee welfare, and investor transparency through our initiatives in productivity, quality, finance, human resources, physical and technological infrastructure, and branding. Chandra, that is the reason why I have often said that Infosys is the best example of the early beneficiaries of liberalization.
What kind of impact did this have on wealth creation? Because Infosys, in all these decades, would have spawned hundreds of dollar millionaires, tens of thousands of rupee millionaires who've gone on to have an outsized impact. So, would this have been possible without reforms?
Infosys instituted an employee stock option plan with two components in 1994, thanks to the reform. The chairman's plan was performance oriented and it rewarded the best performing employees from the best peon to the best non-founder executive director. Of course, the founders were not eligible for any of these, as you know. The HRD director's plan was, on the other hand, to reward loyalty and was based on the longevity of an employee in the organization. The recipients of chairman's ESOP plan received obviously much higher number of stock options than the latter. What was unique about the Infosys ESOP was that we followed the words of Mahatma Gandhi that every decision should be taken keeping in mind the betterment of the poorest employee. Several peons who have probably kept their shares are worth at least 10 to 15 crores. My colleague Chris Gopalakrishnan ensured that every employee who was not part of the 1994 and 1998 ESOPs had at least 10 shares in the company as late as 2008 when he was the CEO. As of date, Infosys has given away 19% of outstanding equity amounting to rupees 130,000 crores today to its non-founder employees. Now, employees have paid significant capital gains tax to the government. They have built houses, they have bought swanky cars, have sent their children abroad for higher studies, gone on comfortable family vacations, and contributed to social causes. In other words, such policies, Chandra, have been win, win, win for the employee, the corporation, and the government. This exercise in democratization of wealth could not have happened without a reformist mindset in the government. The government
Right.
showed its willingness to extend the hand of cooperation in this exercise. It has done its job. However, the industry has not grasped this hand enthusiastically. Infosys has remained a loner in creating a large plan for the democratization of wealth. The corporate sector, of course, has given huge compensation to its senior management, but have not shown the same level of generosity towards the bottom of the pyramid in corporate hierarchy.
My final couple of questions, Mr. Murthy. What, according to you, are the next wave of reforms, areas the government needs to look at to galvanize India towards its ambition of becoming a 5 trillion economy by 2025? And in a sense, to build on the momentum that we are witnessing in the technology and internet economy?
There are many areas which need reforms. Let me speak about a few. First, despite the large population in the country, the number of people with employable skills is low, whether it is programmers, engineers, scientists, doctors, factory workers, or artisans. This is because our education system has not focused on using classroom learning to solve real world problems. The need of the day is to invite top universities, secondary schools, skill based schools like the nursing schools and vocational institutions from the developed world to establish their operations here in India to train teachers in these areas in large numbers. That's the first thing we have to do. Second, we have to bring back our focus on English. Books, journals, and even Wikipedia entries in English, as you know, are much larger in number than in any other language. Whether we like it or not, the only official linked language for the college educated people in India is English. I know several youngsters here in Bangalore who have completed their degrees in vernacular but were forced to take up jobs at a much lower level than they deserve due to their inability to speak English reasonably fluently. Mobility of labor at higher level is possible only if we focus on improving our English. Our exports in general and our software exports in particular will suffer hugely if we abandon this precious thing called English. It is time that we accepted English as an Indian language and encourage it as any other Indian language. Third, we have to introduce flexibility in hiring and letting go employees if we want accelerated growth. This theory is proven, and I don't need any lengthy discussion on this. What we need to do, Chandra, is to create a safety net fund for the retrenched employees so that they can get an acceptable allowance for a reasonable period when searching their next job. The fourth and a very important thing that we need to do is to create incentives for states to perform better. For example, in China, the governors of provinces used to have just two key performance indicators, at least till 2006 when I discussed this issue with them. They were incremental annual growth in exports in US dollars, and second, jobs created in millions. Now, it may have changed now, I don't know, but what I'm talking about is so I can go on, Chandra, but let me stop here.
My final question then to you, sir. In terms of the message that you would have for all these internet entrepreneurs who are going public, what would your message be to them as an entrepreneur who took a company public, a company that's had a huge impact? What would you like to say to some of these entrepreneurs who are taking their companies public today?
An entrepreneur needs to have two important attributes. First is competence, and second are values. That's why at Infosys, I adopted the byline, the tagline, powered by intellect, driven by values. So my request to all these wonderful entrepreneurs is to recruit more and more people who have these two attributes, to run their companies with the best level of corporate governance, and to contribute to this society in a very meaningful way. I mean, they're all very advanced people. They know much more than I do. I'm an old man. My days were the 80s and 90s. So, therefore, I don't think I can tell them much. I pray for their success. I salute them. I wish them even bigger success. But they are the builders of modern India. The nation's hopes and dreams rest on their shoulders. And I am confident that they will take this country to a much higher level than we did.